So my name's Brad Ladisaw, president of the California Mortgage Association, and I'm here with Christopher Donovan with DOS Law and Aletha Nelson with DOS Docs. Thank you both for taking some time right after the holiday weekend to jump in the hot seat with me. Truly appreciate it. And DOS Law and DOS Docs has been a longtime supporter of the California Mortgage Association, and you recently stepped up to sponsor Private Money Basics. CMA cannot put on events, educational courses like that without your support. So thank you both for that. That being said, I know we're tight on time, so we're just going to jump right on into it. Chris, would you mind taking a few moments to introduce yourself and DOS Law a little bit?
Sure. I'm a partner of DOS Law. DOS Law is a law firm that's been around for close to 50 years, exclusively focused on representing private money lenders and brokers. We handle their loan documentation, fund formation and compliance, represent them in front of the regulators if they make some mistakes. We handle their securities works, and we also do, which is kind of unique to us, we also do consumer credit as well, not just business purpose commercial.
And then in that, so I told you we're probably going to have some questions that are not on the list. That first question was on the list. This one was not. Okay. You corrected me last week when I was talking. You guys are mainly pre-litigation, correct? So you're kind of in from the beginning, middle of lenders setting things up ideally correctly to avoid that litigation. Is that correct?
That's fair. Yeah, that's absolutely fair. Our philosophy is to find a niche and try to be the best we can at it. So we're just focused on those services I said, and we'll handle everything up until for the foreclosure process up until the notice of default. Once that's time to file, we want a foreclosure company that specializes in foreclosures to handle that foreclosure for you. We could do it, but we just want to focus on our wheelhouse and really be as good as we can be at that. Same thing with litigation. We handle all the letters and all the things that would lead up to that, forbearance agreements, modifications, as far as we can take it. And once it's time to, and we will, the only kind of litigation we work to do is in front of the administrative law judges. We will defend our clients in front of the DRE and the DFPI. We've scored some major wins for our industry doing that. One was being with business purpose owner-occupied loans. I know some people don't want to do them, but you can. And we locked horns with the DRE on that, and we're lucky enough to prevail. They bowed out a couple days before the hearing. The Attorney General called and said, "Hey, you guys were right about this. We can do these." So anyway, but as far as just straight litigation, we hand that off to people that do that every day, and we think that's the best service for our clients.
Yeah, and I think that's an important point to highlight there. I mean, you have some out there that pretend to be able to do it all. And I think if you're going to a company, whether they're a lender or an attorney or some sort of service provider that is saying, hey, we can do everything under the sun from A to Z, it's like, all right, so what do you specialize in? Yeah. And I think having that specialty, I mean, just is extremely important. And you said DOS Law has been around for how many years?
We're pushing 50. 47 years.
Okay, so you don't make a run like 50 years without, I think, being above average in what you do. You need to be exceptional. You don't have runs like that. So your clients, Chris, when they're reaching out to you, are they reaching out to you right after they start their company, or most of your clients have been running for a few years? When do they typically reach out to you? And is it after kind of shit's hit the fan a little bit, or are they more preventative?
I'd say with us, because we're geared towards the front end of the cycle of a loan before it gets ugly and goes to litigation, that they are preventative. And a lot of our new clients are people that are new to the industry, and I really enjoy that part because you get to educate them from the ground up, kind of like the class that CMA is going to do, but we do it, it's a little longer process than a one day, but same type of deal. We go through, their company structure from everything to start. And when people do call us after, things have hit the fan that we don't want.
You're way more polite than I am.
Yeah. Sorry about that. So we get those calls. Like that one I was talking about with the DRE, that person had already made that loan. That person was already getting an accusation from the DRE. We hadn't helped him with anything, and then they came to us to help him get out of it and save his license because they were going after his license. But overall, yeah, usually they're early on, they're new, they're either, and a lot of them are in the consumer world, conventional, and no one's refining a 3% loan right now, so they've come over into our space and want to know how to do it right.
Yeah, and I think you also kind of touch on a little pain point of mine out there. I feel a lot of us know enough to hurt ourselves.
Hmm.
We talk to attorneys all the time. It's like, but hey, I don't want to cut that check per se because I think I could do it myself. Let's jump onto the slight nuance of that business purpose exemption. I think you were alluding to when you were speaking on behalf of your client in front of, I believe it was the DRE.
Hmm.
That business purpose exemption, was it a consumer loan or was it a business like a cash out refi secured against a primary? And can you do that?
Yeah, it was a owner-occupied property. That was the collateral, and the purpose of the loan was for the homeowner to do a second edition of a book for commercial gain. No personal, family, or household use. Not a consumer loan. So it was a business purpose, owner-occupied loan. For whatever reason, the DRE just decided to ignore that and said it was a consumer loan because it's owner occupied. And we're like, no, this is not even involved in Regulation Z. This is fully exempt because of the purpose of the loan. And the administrative law judge, we kind of hoped, would agree with the DRE so that we could sue her in Superior Court and sue the DRE in Superior Court and kind of make a statement for our industry that this is fine to do. So yeah, it is. Some people don't like to do it because it is more risky. There is a few more nuances that you need to know if you're going to do business purpose owner occupied. And one of the things that we're doing now is a DOS lock where we do a recorded Zoom and get them talking about the business purpose of this loan. What are we really doing with these use of funds? Is any of this for consumer purpose? And get them on record so that if down the road you get a letter from their attorney, you just send them that video and you have their client singing all the things that we know they were singing at the time, and they can't say they forgot and, oh, you knew this was consumer and all that kind of stuff. So we think that's a needed preventative measure.
Yeah, and it's where I think a lot have this misconception where they think it's just because it's an investment property, it makes it a business purpose loan. But it's actually, I guess, from that explanation, more of the use of funds that drives that ship.
Yeah, we have some axioms of private money lending, like get as much collateral and guarantors as possible. But one of the biggest one is purpose is king. It's not collateral type; it's purpose. So you could have a skyrise building, and you could do a consumer loan if the borrower is taking out funds to pay for his daughter's extravagant wedding, or you could have a owner-occupied single-family residence and want to start a bike shop. That's a business purpose loan. So it's not the collateral; it's the purpose.
And I think a lot of mortgage brokers unintentionally will submit loans. I mean, to us, we've seen them, and to others where they think it's a business purpose because it is secured by an investment property, but most of the proceeds are for consumer use. Maybe even that initial loan was a consumer loan, and you're just doing a refi. That could potentially get you into hot water quickly. So I'd like that.
Yeah.
That interview, how has that been received by your clients and then their borrowers jumping on that interview?
Really well, actually, really, really well. And surprisingly enough, even borrowers counsel, we also, if it's a really dicey situation, like maybe we're not in a clearly exempt place, maybe we're using the numerosity test of more than 51% of the net proceeds are going towards business purpose, and it's a little. So we'll actually provide an attorney opinion letter for borrowers counsel to sign off on that. They don't have to do any research on. We did all of it for them. That quotes all the regs and everything to say this is a business purpose loan and why. So that we have their attorney now on record vouching for them. But the DOS lock, no borrowers push back, not once. So our clients are using it, and it's going really well.
It's like, you want the loan? Let's just have a conversation.
Yep.
On camera, and you can see my baby blues. I could see yours.
Yeah.
We could see that we're real people. And I feel some of the riskiest deals we look at, and we rely on mortgage brokers to send us loans. But sometimes those are the riskiest deals we look at because we are an additional layer removed from that borrower. So I think that kind of helps cut straight through some of the smoke and mirrors that brokers, whether they do it intentionally or not, just allows us as lenders to just have that conversation. So it's refreshing to hear that there's not much pushback. And so I just want to pivot a little
Surprisingly,
bit
actually.
here and start throwing some questions Aletha's way because you touched on some big points that I think DOS Docs is meant to solve. So Aletha, would you mind introducing yourself and DOS Docs?
Sure. My name's Aletha Nelson. I've been with DOS Docs for just over 2 years now. And as Chris mentioned, the attorneys at DOS Law have been laser focused on transactional mortgage law for over 50 years. So they wanted to provide easy access for lenders, brokers, and investors with a simple cloud-based platform to generate attorney quality loan docs for a fraction of the price without any annual fees, subscription fees, or minimum volume requirements. Our application's intuitive, so it takes your answers during the intake process and then adds or eliminates documents to the final output for a custom experience. I just want to hit real quick on the business purpose loan certificate that we do have in our loan document package. Based off of, having to utilize the DOS lock for our customers with DOS Law, we wanted to highlight in the certificate in red, in bold, this is business purpose. And the borrower can't miss it unless they have some visual impairments, but they do have to fill out the purpose of the loan and what they're taking out those funds for. So we want to make it crystal clear for everybody involved.
I like that. I mean, sometimes with our investors, they have to wire directly to title. And every time I print it out and it's in red pen and it's bold and it's highlighted, it says, please reference the title order number. I still miss it sometimes, but in this instance for docs, the interview coupled with that disclosure in red, I think we're only as strong as our docs, and we're not in the business to call our borrowers or brokers liars. That's not good for business as well. But from my auditing background, if it's not documented, it's not done. So I think having that flow from DOS Law to DOS Docs, you're taking nearly 50 years worth of experience into those docs. I want to drill down on those docs a little bit more. Are they only California, nationwide, only business purpose? What types of docs do you guys offer in what states?
Yeah, we actually have docs in all 50 states. So although the majority of our docs drawn are for business purpose, they're very feature rich. With the 50 state coverage, you can cross collateralize 2 properties, have 2 borrowers, 4 guarantors. You can get very specific on it. But we also have construction loan docs available. Our broker investor package is also highly utilized. We have consumer bridge loans for California to other states. When you have a seller carryback that wants to do a transaction, we have those docs as well. And then we've had for a while our modifications and extensions, forbearance agreement, the default letter, pre-negotiation agreement, and we recently added in a subordination agreement as well as an intercreditor agreement. That was born out of a need from our customers requesting it, so we added it to the platform. And taking their feedback into consideration as well, we're also going to be releasing a payment reset letter too. That's only going to be $99, and it allows you to quickly modify the first payment date and maturity date on your loan docs. So we have some major things coming up this year, but that's what we have available right now.
I've talked to you ad nauseum, both of you, your services, and I just learned something new in all the new ads that you have with DOS Docs. I mean, it's so let's rewind.
Sure.
A decade ago, you'd probably, I don't know what, Chris, you'd buy a set of loan documents and then you would be just self-generating them yourself, or you would engage an attorney to draft them on a per deal. That was effectively the 2 options, right?
Yeah, mail merge or pay an attorney.
So I'm going to ask you, is someone that buys a set of docs and has them for 4 or 5 years, what could go wrong just using that old set of docs, generating it yourself? Again, question's not on the list.
Yeah, no, good. No, a lot of things. But it really depends on has there been major changes in our industry during those 5 years? And that's who knows. Usually yes. Usually there's going to be some big ones. So we made major changes recently on our agency disclosures. That isn't a like case law change. That is a change just based on what we're seeing, that there's confusion from borrowers over when does your Brad agency end representing the borrower as opposed to the investor, because we have situations where the brokers now thinking they're just representing the investor and saying, hey, yeah, you should foreclose on this property, it's worth a lot. But now the borrower's like, whoa, you're trying to encourage him to foreclose on me? Like, I thought you were my guy. So now we're clarifying that from the get-go. One of the biggest ones that rocked our industry was Huncharu and default interest. So we made major changes to our default rate provisions. You have choices whether you could choose actual damages or do a default rate add-on, and tried to protect our clients as much as possible with that case and how that rattled our industry. Same thing with fires. Like, we've added new natural hazard protection. So all those things you just wouldn't have if you had a set of loan docs from 5 years ago.
Yeah. Can we dive into that Huncharu case
Sure.
a little bit? What
Yeah.
was that final ruling? We don't need to go into what happened with the case, but simplify it for someone like me that is a spreadsheet guy.
As far as what we made changes?
Not the changes,
Oh.
but what was the result of
Okay.
that case pertaining to the default interest? Because
Ba-
it changed how we've been doing it since inception, I feel like.
Yeah. Basically, if you have a prematurity payment default, you can no longer change the interest rate on the entire principal balance. So you can't go from that, whatever, let's say 12% to 18 on the entire amount for a prematurity payment default. Was the big body blow to our industry that hopefully we could rectify at some point.
So we got our payments due on the 1st, late as the 10th. If we go to the end of the month historically, depending on how that lender did things, they would probably assess that borrower at default due to lack of payment or a payment default and assess them at the default to interest. Now you're saying that it is no longer.
That's right.
And then it's only for a maturity default. Are you able to do it with the maturity default?
Yes. Yeah, you could do it with a maturity default. There's people testing what you can and can't do before maturity, but yeah, absolutely you can after maturity. But before that, there's a couple things you could try, but it's shaky.
I mean, who wants to be the next case study? Not me.
I
even put on my boring sweater. When it comes to loans, I try and be as boring as possible.
That's great.
So, Letha, back to you on the docs. The two companies, I assume they're communicating very closely together for any changes, not only in legislation, but whatever judge wakes up and decides to roll on that could affect how we apply certain things as simple as default interest. How often is your team reviewing and updating your docs?
All the time. All the time, Brad. We don't do once a month or quarterly updates. We're updating as ongoing cases are coming out, right? We make updates based off of our customer requests as well. So in Q1 of 2025, we had no less than 10 updates to our documents. We added in the death of key principal protection. We expanded our prepayment penalty options. We added table funding capabilities. We added the agency disclosure that Chris talked about. We also added a language disclosure for people that are not native English speakers. We have those hazard provisions. And then, of course, we're adding in those additional document packages like the intercreditor and subordination agreements. So we are doing multiple updates a month. I think we did like 4 or 5 in March alone.
So I think technology is moving quickly. We talked about just a decade ago when you get your own set of docs or you go to your attorney per set to now it being cloud-based, and us as your clients are able to effectively get as real-time of updates on our docs as possible. Whereas in the past, I'd email the attorney, hey, have there been any updates over the last 12 months that I need to be worried about in these docs? And the attorney would run through them. Like, no real big changes. Here's a few red line changes. Go with this set going forward. Whereas now, if something happens, it's on our next set is effectively implemented there. And all right, technology's moving quick, Chris. Our favorite conversation. AI, is that the saving grace to everyone out there? And what are potentially some of the benefits of AI, and what are some of the risks that you're seeing in the industry as it pertains to implementing AI in our day-to-day?
Alisa, do you want to take that, or
disclosures?
Yeah. We're using AI a little bit on our side. just to make sure the readability of the documents is clear. There are a lot of different ways you can utilize AI. I've been to multiple summits recently talking about some of the benefits as well as, some of the failures of it. AI has become extremely prevalent. I've heard horror stories when I was at Finovate recently where a boardroom with 25 employees deep faked their executive and had them wire hundreds of thousands of dollars, and it was all AI. So they're encouraging using safety words, with family, with business, having some sort of code just because of how advanced it can be. Some other concerns to be aware of is when you put information in AI, it becomes public source information. So it's no longer proprietary. That's something you want to be aware of. But, there are some wonderful benefits. You want to do a LinkedIn post and you don't want to think about how to type it out, throw it in Chat GPT, copy paste, you're good to go. I would say it can be a valuable tool, but should not be relied upon 100%.
Yeah. Chris, we had a nice dinner. Was it last
We did.
year? And there was
Yeah.
a friendly conversation over dinner, and yeah, we won't go into the weeds on what the battle was about, but would you mind sharing what the other person's source was for a very big decision they were making for their clients?
Yeah, I feel like it'd be hard to tell the story without going into the weeds a little bit, so I'm just gonna touch the weeds.
Let's do it.
Yeah, so it was I was having a
Only your
conversation.
name and my name shall go
Yeah,
on
of
the
course,
record.
of course,
Yeah.
yes, me and you and a bunch of random people. So I was at one side of the table. I think you were, on the other side or in the middle.
I was like right in the middle. I was in the
Yeah, you're in the middle.
I was
You're right there.
50-yard line, baby. Yeah.
And I think I was at one end, and the gentleman I was talking to at the other, and someone said, "Oh, what's the late fault provision for a consumer loan? Business purpose for DRE is 10 and 10. A consumer," I said, "Oh, 15 days, 4%." And our friend that I was phoned out said, "No, it's 15 and 5." I said, "No, like I know this because I do it all the time, but also these gentlemen here at CMA, I've gone to webinars on consumer. It's 15 and 4. That's what's on the slides. So anyways, so then he went to show me the evidence, and I could see on his phone, I'm like, you are using AI. AI is not legal counsel. AI said 15 and 5, but AI is wrong, my friend. So yeah, that was a fun one. That was like a real life, just kind of happened that you got to see play out, which was fun.
Oh, and we joke around about it all the time now, but I think that is probably one of the biggest risks of AI. It's still in its infancy. Extremely powerful.
Yep.
It can be part of your tools that you use, but it's tough to eliminate or go around legal counsel. I am of the belief, and I've said this very loud since AI has been gaining steam, that the individuals that are utilizing AI right now for contracts and to kind of save some upfront legal fees are going to be paying their attorneys a whole lot more in 12 to 24 months to get them out of the mess they got themselves into by trying to save a few bucks on the front end, especially if they're utilizing it and they're using a lot of their investors' capital or putting them into that. That scares me.
I do.
But I think it'll keep you guys busy.
We don't want to be that kind of busy. We'd rather utilize us on the. It's way easier to help us or have us help you on the front end than clean up a mess on the back end. It really saves us time. It saves you money. We'd prefer that. Yeah, AI is a good tool for your toolkit, but it can't be your only tool. It's just one tool out of many.
You make a very good point. Once you put it in there, it's like public record, no longer proprietary. So if you're putting in sensitive client information or non-public information into this open source code, it's out there. And if you're putting in structures or, again, very sensitive information, I think that's something that should be yelled at the rooftops, because I don't feel some newer implementers of AI really grasp that on that. So I want to keep diving into DOS Docs a little bit. You said
Sure.
all 50 states. And you listed a lot of other features. So initial disclosures, let's bring it to California, because that's where I'm at, and that's where most of our CMA members are lending. Do you help out with or have the ability to issue that MLDS with DOS Docs?
Yeah, our docs are written for everyday brokers. So we have the 50 state broker disclosure, like the California MLDS. It does all the math for you, so you don't have to generate it on another platform or try and use your math skills to figure out all the numbers. We do that for you. And then we also have provisions for multi-lenders. We added in the MIN and the MERS. We have additional protections for junior liens, loan rebalancing, LLC pledges, SNDAs, SP provisions, bad boy guarantees, and then you can cross any 2 points in America. So for the DSCR lenders, we also included some table funding docs. And then at the beginning of our documents, we actually have this really beautiful 3-page summary. So if you have, a doc processor on your team that's doing those docs for you and you just want to run quick QC, you make sure that summary is good, and if it's correct there, it's going to be correct through all of the documents.
I think that's a very important point because it's not really feasible for some people to do the originating, the underwriting, placing it with the investor, drawing the docs, setting up the loan servicing. It creates a lot of spots for error, especially if you have to input the same number 3 different times or 4 different times. So it sounds like it is just a one-time upload, and it allows a manager or higher up to be more in a review position versus the data entry. Is that fair to say how that summary page works?
Absolutely. Yeah.
And you touch on something, table funding. Chris, question for you. And disclosure, didn't throw this out there. It's not legal advice. You're no one's attorney listening in. This is us just talking shop. But I got a question for you. Can you do table funding? Is that allowable in the state of California?
No, it is not.
Okay. Just want
but
to say that out there.
Yeah.
Consult with your attorney.
Yeah.
But it's
that's my friendly educational advice to you.
Yeah, you read it in a book, right? Non-AI, years of experience advice. And I think that's something that, again, it's with the flood of institutional capital, I think it's been great for lenders and borrowers to get access to different types of capital, different types of loan structures we weren't even thinking about 15 years ago. But just because you could do it in Missouri doesn't mean you could do it in California or vice versa. And I think that's something that all originating brokers or lenders should kind of take into consideration. Just because you have the access to the capital, still may want to put in a phone call to your attorneys to say, hey, can I structure it in this fashion in the state of California, or do I need a license, and what does that look like? And with DOS Docs, I think it's fascinating to me to hear all the add-ons that you've done to kind of probably catch some of these things. It's like, hey, you're trying to set it up for table funding in California. It's like, hey, that flag, like, probably can't do that, and I think there's great value in that.
And Brad, every single one of our doc sets has a little disclaimer that says, if you're unsure, ask your local attorney.
It's important. You can't say it loud enough.
No.
Hey, you plug it into AI, and AI's like, sure, you could table fund, but it's
And hitting on that, just out of state, I think a lot of people think they can make business purpose loans in every state, but every state, like you were comparing Missouri and California, is different based on loan purpose, collateral type, lender type, borrower type. No two are the same. They're all different, like usury rules. So talk to your local counsel if you're going to venture outside of a state when you haven't done it before and you don't know the rules.
No, and I think
we help our clients with that.
It's like a good opportunity, again, if you have the ability to go into other markets. 15 years ago, no one would really think about it because a lot would service their own loans. Technology has improved greatly to where potentially you could outsource loan servicing. Now it's more streamlined across a majority of the states. That was a big hurdle. And the other one was loan documents. You couldn't find an attorney in Missouri that could also do docs in Florida as well as New York. And I think how quickly the technology has changed has opened up markets, but it has also created some unforeseen risks that no one really talks about or brings up. I'm not going to get into tax implications of doing proper statements and filings in all these different states, but it's great, but it's a double-edged sword with that. So I want to pivot a little bit here. Chris, where did you go to school? And did you always know you were going to be an attorney?
College, I went to San Diego State, and then I went to Thomas Jefferson School of Law. I always, even when I was in college, I was in the pre-law society, and always had a gravitation towards law. Um, Originally I was a financial advisor before that, and I learned the number one reason for divorce and suicide was financial issues. I wanted to help people with those so that they didn't have those horrible outcomes, and so my goal was to kind of learn about finance as much as I could and help people with it. Um, while I was in college, I did commercial finance, did basically what your company does, and I liked the legal side. It just kind of was more drawn to me, that area I enjoyed. So I jumped over to the legal side after doing kind of basically what your company does.
And so you got on the legal side. Did you know you were going to be, once you, I call it, it's not declaring your major. That's what I did when I went to school. But when you, I guess, made up your decision to be an attorney, did you know you wanted to be on the debt side out the get-go, or did it take some time to kind of find your specialty? That always fascinates me. I always ask this question to attorneys because some are stumbled into it, others like, yes, I know I wanted this, but how was it for you?
Yeah, I'd already gone to college. I'd already ran my own business that, was a direct lender and a broker, and I knew exactly what I wanted. So I always wanted this. Um, you know, Dennis Doss is my mentor. I think pretty much anyone that listens to this probably knows who that is. But when
If
I
they
remember,
don't, they should.
yeah,
Yeah.
when I remember reading the posting after I, had finished law school, and I read his posting for the position I'm in now, and I got chills. And I'm like, this is it. I got chills. I'm like, this is it. I called my wife. I'm like, this is it. And ever since then, it's been it. So I knew.
And how long have you been with Doss Law?
I've been with Doss Law since 2018. So
Since 2018, so we're pushing on 7 years.
mhm.
How do I want to ask this? From when you first started to now, do you see some of your lenders or clients making some of the same errors that they did in 2018 timeframe, 2019, or do you see other kind of hidden, I guess, landmines in their processes due to some of this change in legislation or change in different court cases that have come down the pipe, or is it kind of one and the same?
Yeah, I think it's one and the same. Like some of the problems have changed a little bit just because of different like case law that has come out since 2018, but it's the same, kind of mistakes of you know, making a deal without proper legal counsel and not really knowing what you're doing. That's really what it comes down to. When I see mistakes, like we could have prevented all this if you just picked up the phone and we talked for 5 minutes.
You did what?
Yeah, but it was like that then. It's like that now. It's pretty much, if you know what you're doing on a deal, you're comfortable, you've done it before, keep doing it. But if you're first time seeing it and you get a little funny feeling in your stomach, something doesn't feel right, call legal counsel that can help you.
Yeah, and so do you see more deals get into a sticky situation on the underwrite itself with value verifying borrower, or do you see it more on the disclosure and the docs that kind of gets them into hot water?
I know it's an annoying answer, but it's both. More like the underwrite and the appraisal and the valuation situation is its own thing that we don't really get as involved in. We don't underwrite your deals, so we see probably more of the other, but we see both. Disclosures and not using, some people are making, we get people that call me and they're unlicensed private money lenders. They didn't go through a broker. They made a 12% loan. They use title docs. They just have a note and a short form deed of trust, and it's like, oh man, you just lent $1 million on it. You didn't get any counsel at all, and it's those hurt, and I feel bad for them.
Yeah, and if we keep going down some of
It's
those,
an innocent mistake.
we'll be drinking way too early on a Tuesday.
Exactly. Yeah, it hurts.
And I'm of the belief that we could underwrite to value. We could get comfortable with that. We could verify borrower's track record. We could pull their credit to make that kind of credit decision. I think a lot of the risk is in that disclosure process, potentially doing a deal that you think is going one way when it's actually not allowable, and then also that post-closing and your docs. I think we're only as strong as our docs. So Letha, if someone's looking to use DOS docs, how does that work? Do they reach out to you, and do you offer demos? Walk me through how a new client or a new lender is reaching out to you for the first time, how that process works.
Yeah, absolutely. So if they have an integration with one of our loan origination software providers like Mortgage Automator or Liquid Logics, the process is a little bit different because they'll have already input the majority of the data into their system and then can just push it into ours, fill out any other questions in there that are necessary, pay and generate their documents. The other customers that we have that don't have the origination software can either go to DOSDocs.com, choose their state, choose their document set, and then just start doing data input. And if they have any questions, they can reach out to support. So we have a fair amount of customers I never even speak with because they just are tech savvy, adept, and they know what they're doing. And then, of course, we have some customers who want that demo. So I'm going to walk them through their first set. I'm going to show them how to use the platform. We have a variety of how-to videos on YouTube available for them, and then they can email support at dosdocs.com. And we go ahead and reply to emails even when we're in meetings, but we have a range of services available for them. So it's kind of what's your learning style, and we'll help you out.
And then with all the different disclosures that you offer, it sounds like on the lender side as well as borrower on the front end, note modifications and some of the others, is it more of like an a la carte type service? If I go in and say, hey, I want to draw a note modification, someone could go in and generate a note mod. It doesn't sound, or maybe correct me if I'm wrong, there's no onboarding to DOS Docs where we have a annual fee and then a volume base. I think you touched on that earlier, but would you mind elaborating there a little bit?
Yeah, sure. So there's no onboarding process. There's no setup fees. It's literally pay as you go. So if you want to generate just a modification, you can do that. With our business purpose, you're going to get everything: the mortgage loan disclosure statement, your loan and sales security agreement, your note, your security instrument, and all of your state and broker disclosures that are necessary for you. So depending on how complex your deal is, that's going to determine how many documents you get in your package, right? Because it's smart, it's intuitive, so it's taking everything you're putting in and giving you what you need. You can definitely, if you have a preference on your servicing form and you don't want to use ours, swap it out. Not a big deal, right?
Yeah.
But we're going to give you everything you need based on what you said you're doing on your transaction to make sure you're doing it right.
Got it. So if I were to call you on a Thursday and say, hey, I want you to kind of walk me through this, first time using DOS Docs. I'm a threshold reporting broker, privately place my loans with high net worth individuals. And so I need to issue the MLDS, I need the loan docs. We're doing a fix and flip loan. So with that basic information, you'd be able to say, hey, Brad, you'll want to select this package. And within this package, you'll get the initial disclosures, the MLDS, which I think still surprises me how very few brokers actually issue that, but we'll leave that for a completely different conversation. But I'd be able to kind of get that, then the docs, and then since I'm privately placing it with an investor, the initial disclosures such as the LPDS and a loan servicing agreement, I'll be able to get that as well. Is that correct?
Yeah, that would be in our investor doc package.
Perfect.
So if you generate your business purpose set and you say, hey, Aletha, I don't want to rekey any information, but can you push this into this other set for me? I send you an invoice, I push it through, I give you a new link, and you can go on your merry way.
Also, I won't need to go and input it for that separate document
No.
platform. It's inputted on the front end, or if we're integrated with our loan servicing software, it could just pull directly, clean up some things, or maybe additional items that might not be in our origination software, which maybe we could add. And that way it's inputted once, reviewed a few times, pulls through. We're just reviewing to make sure it's accurate, and that could get pushed through to the LPDS and investor disclosures.
Yep, and you can generate up to 10 packages on that investor broker package.
And Chris, why would it be 10 on a private placement quiz?
That's the max.
Yeah.
That's as high as you can do with the multi-lender rule.
Thank you.
Yeah.
Didn't know it was a case study quiz day
Yeah.
today. So
No, I like it. It also produces a loan servicing setup form, so you can board easier with your servicer. I think a few really good things to highlight are that I don't think other DocGen companies are doing. If they are, I don't know about it, but it's just that it does produce all the broker disclosures. It does produce all the state-specific disclosures that others don't. And then also, when you create documents on DOS you're ready to go, or you could use your own legal counsel if you need it. There's legal services over there. That's why it's the price it is. But if you need legal advice, from what I understand, some doc companies either aren't attorneys, so they can't give you legal advice, or even if they are attorneys, they won't. But we will. So if you need legal advice on DOS docs, because there's a hybrid, you could either go attorney drafted with us, and it's going to be more expensive, but we're going to do everything, right? You can on easier stuff, we created DOS docs so it could take care of those, probably 95% of loans that are pretty straightforward. You could do on your own. You have experience. But there's also a hybrid model where you could generate on there, and you could just pay the DOS law attorneys at hourly rates for any legal questions you have. Because at least, or DOS docs wouldn't handle those, but we could.
so it's truly under the DOS law umbrella to
Yeah.
where it's like, hey, you have a question on my docs,
Or here.
call us.
Yeah.
Call us. We could walk you through that. You're not required to, but
No.
hey, we're available.
Right.
I love it.
Yeah.
All right, we're doing a pivot here.
Okay.
Aletha,
Yeah.
when you're not working, hitting conferences, onboarding new clients, what do you do for fun? Just like I said, when you're not working, because I know you guys are always everywhere. But
Yeah. Well, first, I'm a nature and animal lover. So, I'm typically hanging out with my two Belgian Malinois, Atlas and Apollo. Apollo's 6 and Atlas is 3, and they are my adventure ride or dies. They swim with me, they hike with me, wherever I'm going, they want to go. So they're my adventure buddies, and I'm working on getting them to paddleboard with me. It's a little tricky, lots of flipping into the water on that front. But yeah, paddleboarding, kayaking, wine tasting, spending time with my family and friends, and then in my little bit of free time, I also volunteer for the Malinois and Dutch Shepherd Rescue. So we help Malinois and Shepherds get out of shelters into foster homes, and then work on getting them into a forever home in 3 months or less.
that's amazing. How did you get involved with that group?
Because of my mouths. Just looking it up, there are an insane amount of Malinois that are put down in Southern California every single month. So they are near and dear to me. They're the smartest, sweetest dogs I've ever had. Protective, loyal, and I'd love for other people to be able to have a positive experience with them. And oftentimes it's just a matter of finding the right home. So being able to help with that process has just brought me a lot of joy.
Yeah, and I think once you add a dog to the family, for people that aren't dog people, if you babysit a dog for a few days, you'll quickly realize how they're like little humans, and they have the emotion in their face. Like my dog Bud Heavy, he's golden retriever, but that guy, he's got some looks, and it's like, you're talking shit to me right now, Bud. I can see it in your eyes. You got that little smirk going.
Yeah.
Um,
Yeah.
But one more question for you. Bucket list trip. Money is not an option. You could go anywhere in the world with whoever you want. Bring in the dogs. What's your bucket list trip?
I would spend a month, maybe 2, in New Zealand and travel north to south doing every guided outdoor activity I could do. So ziplining, skydiving, cage diving, paragliding, jet skiing, pretty much any adrenaline junkie thing you can think of, I would do it.
Damn, I'm glad I don't have to follow you up with the question I'm going to ask
Yeah,
Chris.
thanks, Aletha.
Awesome.
Sorry,
Thanks for
Chris.
sharing that.
I was supposed to go first. What happened there?
So, Chris, when you're not helping out your clients or in the office, what do you like to do for fun?
I'm kind of boring. I'm a really dedicated husband and dad, and I love being with my family. So we have such an amazing extended family that I really don't. I have some, but I don't need personal friends because we're just huge and like so close. Actually, my cousin just got married in Newport Beach this weekend,
Okay.
so the whole family got together, and there's a bunch of us. Every year we go to Tahoe, which is a big part of our family tradition. We have about 50 to 60 people that go up there that have been going to the same area for around 60 years since my mom was a little girl, which is really special and keeps all the cousins really tight and their kids really tight. Family vacations, spending time with them. My more recent passion that I've enjoyed is my kids are now, my daughter Layla's 8, my son Christian's 6. They're playing sports now, so I'm coaching their teams. I played college basketball. I'm a competitor. I like the whole sport environment. Not that it's about that at this age. I'm all about having fun and wanting to come back. Winning on top of that is nice, but I just the whole process of the teaching you can do through sports. So my family is a big line of teachers. When I'm kind of done and I don't want to work as much, I'll probably go into education and teach at like a law school, because I just think you can really impact lives through teaching, whether it's sports or in a classroom. But yeah, those are things that are important to me.
And we've talked about that a lot because my boys are 5 and 3, and I told you at the last CMA conference that T-ball's coming up. My wife says I'm too competitive to coach T-ball. I ended up getting roping into coaching T-ball.
Yeah, it's the best.
But it's so fun, like, and rewarding to see these kids that come at even at a young age. And for the record, they all know what winning and losing is, even at the ripe age.
You don't have to tell them. You don't have to tell them.
I think with team sports, it's growing together, it's learning how to work in a team, and it's also experiencing failure, I think, at a young age. And I think you do that in a team environment, and there is such thing as losing graciously. Absolutely. And you learn from it. And then as a coach and coaching your kids, I'm sure you see some that, you're going to be a stud athlete in 5 years, and it's and others
or you already are, even though you're 6. Like, you're already doing stuff like, whoa, you're a beast. That's amazing.
And then I know you have your family tradition, that trip that you do, but I'm going to throw the same question your way. Bucket list trip. If money is not an option, whoever you want to bring, who you bring, and what are you guys doing?
I think we just took it. I think I was very happy. Like, the Tahoe thing's great because everyone's there, but it's a lot, right? Every time we're going rafting, we have to organize 50 people on rafts, and it takes a while, right, to move that ship. When it's the 4 of us, when it's just my wife and my 2 kids, we can get a lot done. But we just did the Disney Dream in the Caribbean, and got to be there for a week, stop at 3 islands in the Bahamas. It was beautiful, and one nice part about it that I don't experience on other vacations is I didn't have internet, so I was officially on vacation. Because usually, while I'm on vacation, I still will, get sucked in. I'll work a little bit more than probably I should, but I couldn't. So it was just fully checked out with my wife and kids and experiencing different tropical experiences. We swam with dolphins, we swam with stingrays, we had all these little adventures on each island, but it was beautiful.
I think anytime, whether it's with your fur babies or just your kids, just being able to unplug. Yeah. And everyone's so connected now with Wi-Fi everywhere. It's when you could go and just force turn that phone off. I mean, the first 24 hours is hard. But if you have no option, and then after that, it's, hey, now it's just the sundial we're working with and the watch on my wrist. Yeah. One more question for you, Chris. You attended Private Money Basics last October. Unfiltered feedback. What was your experience kind of sitting in the audience at Private Money Basics, and what can attendees expect for Private Money Basics next month?
Yeah, I'm not saying this just because we're on here. It really was. I've been to a lot of CMA events over the years. It was my favorite CMA event ever, even more than the conferences. I just love. CMA really distinguishes itself from other conferences, and I'm not going to name any other conferences, but sometimes the panels, and it's kind of a self-promotion rather than actually substantive education for people to take away and use in their business. And I think CMA really does that better than anyone else. So, and the one-day class is pretty much all substantive information. There's some networking, but it was really, really good. It was really heavy on what's really important. I think if you're in that room, it's going to save you from, not necessarily maybe not going to jail, but maybe, and because you're not going to make that consumer loan or business purpose loan that ends up being consumer, but it'll save you maybe from some lawsuits, some heartache, some difficult loans, really like tangible stuff you can implement that next week. Just take great notes. It was probably the most informational day that you could have in our business that will teach you as much as you can in that condensed amount of time. So I'm a huge proponent of it. I'm going again because I loved it so much, and can't wait to do it.
I appreciate that. That feedback. Always like getting unfiltered feedback because it's real.
Yeah,
and
it's real.
yeah.
And I forgot to say the moderators did a pretty good job too. No, you and Joffrey held it down and kept it moving. You know, sometimes people can get lost in the weeds. You got to keep it back on track because there's only so much time. But you guys did a great job of balancing, letting people interact with keeping us focused on the main thing.
Well, and it's important to have attorneys such as yourself there in the room, and that's something that attendees get. They get access to you guys for the day, and it's we have the networking breaks, but we're going to have Dennis up there. We got other attorneys up there, and I like to ask pointed questions, and I think that's where the real value is at. And then Dennis and the other attorneys making themselves available to answer questions all day. You really don't get that access anywhere else. And it is a little bit like drinking out of a fire hose, but that's intentional. And we're going A to Z, kind of full outline and framework. But really what we want the attendees to have, here is who you can contact at any point of your process in running a loan originating business to make sure you're kind of doing it right or going in the right direction. And we just want to have that readily available, and we can't have one-day courses like that without the support of DOS Law and DOS Docs. I want to thank you both for not only jumping in the hot seat with me today, but also stepping up as a sponsor. You can't put the appreciation into words. So thank you guys so much for that.
You're welcome. We're happy to be there. We're very honored to be there. So thanks for having us.